Okay, everybody, this is John. Welcome to the free video, and this is live from Las Vegas. This is our last day. We've had Mark Douglas giving some awesome talks today on the whole idea of what the proper state of mind is for trading when you're in a trade, and which is really important. And as we head into Wednesday with the FOMC announcement, one of the things that I'm watching is that we have an interesting potential reversal setting up in the yen futures. Okay, you kind of have a sloppy head and shoulders bottom, right? We're bumping up against the upside of a downward trend line, and we've got a squeeze. And it's no accident that we're stopping here right before the FOMC meeting, because this is kind of the line in the sand. This is where bulls are willing to bid it up to without overcommitting, and it's where shorts are willing to defend, and so it's kind of a happy medium. And then based on the FOMC announcement, one side or the other will have conviction, more conviction than the other. So the question here, in my mind, I think the biggest thing that we're going to look at this week is what happens if this breaks to the upside and starts running. Because the correlations between the Japanese yen and the U.S. stock market for years has been that if the Japanese yen is going higher, i.e. the yen futures, not the spot market, they're reversed, then stocks have been going lower. And so my question is I'm looking at this going like, well, to me it looks like this is going to go higher. And does that mean, though, is the correlation between stocks and the yen still valid? Okay, so the long story short here is that it's not a slam dunk that the stock market yen correlation is still intact, because a bunch of correlations have been breaking down and the stock market has been rallying no matter what happens. But this is essentially the next big one. Is this the next log to fall, or next, I guess, domino? I don't know why a log would fall, but the next domino to fall on something like this in terms of a breakdown in correlation. So to me, for my money, that's the most important thing to watch for tomorrow. Okay. In terms of earnings, couple stocks that we're watching today. In the premium video, we talked about Apple, Twitter, Amazon, etc., etc. For Buffalo Wild, you can see that we closed at, let's see, where is the bid ask on this? I think after hours. Got that. Yeah, so on this one, on Buffalo Wild, and we're seeing a squeeze here. And we can see this thing closed up, okay, $4.55, but where is this thing ending up after hours, right? In terms of earnings and option plays and all that kind of fun stuff. And what I want to do here, okay, so here we are. We can see the after hours. So here we see Buffalo Wild Wings had this nice rally, and then after hours down at this point, looking like about 10%. So well outside the expected move. This is kind of one of those that I've seen, like with the Buffalo Wild Wings, is that you've got thin options with wide spreads. That a lot of the safer opportunities are the next morning. Okay, and so on something like this, we'll see that the move is essentially baked into the trade by the open. Although there'll still be a lot of panic and uncertainty at the open, because people are going to be like, oh my God, it's down, this far. And that's a good opportunity to sell puts. So that's what I'll be looking on that. And Twitter is interesting because the move essentially came, it just kind of happened. Like there was something that was like released early, right? And so it flushed down, and then you can see after hours it's having a little bit of recovery. And this one's going to be fascinating because somebody kind of slipped and released things a little bit early. But on something like this, you see this low down here, there's a very, very, very high probability that if we open here at 42.80, that we come down and retest these lows. Okay, so that's a play that I would be looking at for tomorrow. And then what's interesting here, if this one will come up, is for Apple, and obviously these earnings were yesterday. And let's kind of bring this up here. And I thought what was interesting about this is that, we rallied up, and everybody was expecting like, oh my God, they're going to have huge results, so the stock's going to have a huge move. And ultimately it stayed not only in its expected move, but well within its expected move, meaning that anybody who bought options lost money, and anybody who sold options made money, which of course is every option seller's dream in terms of earnings. And then along those same lines, I wanted to look at Facebook here. Where was that one? Yeah, and so Facebook kind of had a similar situation where there was a lot of hype around the earnings, and it kind of flashed down, kind of showed some strength, and then ultimately kind of petered out. But same thing, that anybody that was selling options made money. And so what I've noticed, at least with this earnings season, is that the stocks that have had the most hype, okay, and the most skew to the upside, meaning that out of the money call options were twice as much as the equivalent out of the money puts, have had the most mediocre reaction. Okay, and it has nothing to do with their results. It's just this is the market sucking in retail money. So I would just caution that if if you're watching CNBC and you keep hearing about how great a company's earnings are going to be, that becomes a great candidate to do an iron fly. Okay, last but not least, I've talked a lot about iron flies this week as it relates to earnings, and it's important to kind of understand that, but also that iron flies in and of themselves are a nice way to take advantage of essentially how options have been set up. Okay, and how options have been set up is that they have a ton of premium. And you can do iron flies for income. You can do iron flies around earnings. Iron butterflies, iron flies for short. And I like doing them around earnings, but even more from a practical level is these are actually a great source of income in terms of really taking advantage of selling what I call the fattest premium, which is at the money, but also doing it in such a way where you're protected. Okay? So on this upcoming Wednesday, from 8 to 10 East Coast time, which is 7 to 9 Central time, Bruce is going to hop on a webinar and show you guys how he trades iron butterflies for monthly income. And what I like about doing this is that instead of selling something, say, 2 standard deviations out, where you get this little bitty credit and you've got a lot of risk at play, the iron butterfly is completely reversed, where you have a potential for a lot of credit, okay, and a little bit of risk. So he'll be talking about how to set up an iron butterfly so you know how to use it, okay, and why it works. And let me scroll down here a little bit. You can see there we go. And when to put on a trade and when to take it off to maximize your profit while minimizing your risk. And part of that just knows, and I think that's kind of the biggest thing I've seen with a lot of, especially options trades. They're actually pretty easy to put on, but where a lot of the questions come up and where all the difficulty lies is when exactly do I take this off? And that's one of the things that Bruce will spend some time on. A step-by-step checklist of how to put on a trade and take the trade off so you know exactly what to do. The specific time you close the trade to protect you in a bad trade so your return remains consistent. And there's always going to be that one trade once in a while. It's just like, oh my God, this thing's horrible. What Bruce is going to tell you is that at what point in a trade do you just close that out so it becomes a manageable small risk instead of turning into something bigger. And of course, the nice thing about the iron butterfly in and of itself is that the max risk on it is pretty small. How to avoid the most common mistakes people make when trading an iron butterfly. And of course, Bruce always has a ton of awesome information, so he'll be including that as well. This class is $97. It's designed to give you some specific knowledge that you could make back on a one-lot trade. Okay? So again, this will be on Wednesday, the 29th. If you can't attend it live, it can be recorded. It will be recorded. You can view that. And Bruce is just going to share some awesome information with you on this specific trading technique. All right, you guys have a good night, and we'll see you at the next update.